Hello everyone, how's it going? In this video, we're going to cover Bed Bath & Beyond, trading under the ticker symbol BBBY. The market has been very volatile as of late, with many titles having huge up and down swings, and the volatility of BBBY may be able to provide gains or losses for people who want to test their luck. So in this video, we will take a look at the stock from a technical and the fundamental perspectives, and to determine what could be a recommended action plan to carry out for BBBY. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. So, over the past few days, BBBY has been performing, I would say, within people's expectation. What do I mean by that is that at least the pullback hasn't become a continuation of the bearish trends. The current stock price is hovering around like the $2.86 level, or just below $3, and we're still hoping that there will be some sort of bounce back or takeoff from there to at least $5. And in terms of future potentials, I would say that yes, opportunities are still there, but because of the state of the company, it's mainly going to be short-term trading opportunities that I recommend the most. I'm really not convinced that this company has like any sort of long-term future in the current state of things. They would have to do much better in terms of the fundamentals and like the quarterly reports before we can talk about like anything long-term just yet. And the reason I say this is because if you look at things from like a purely price action perspective, from a scope of like 6 months or so, it would seem like the stock has like a pretty good dynamic going upward. But if you use the scope of the previous 5 years, well, I mean, the stock has traded at some point at around $30. So we're now down by 90% if we follow this kind of logic. So there has to be something to be done regarding the overall operations of BBBY, because otherwise we're only going to be profiting from the swings and not really from the dividends. Bed Bath & Beyond is a home goods retailer operating under the ticker symbol BBBY. It is founded back in 1971 and is headquartered in New Jersey, operating stores in the States, Canada, and Mexico. The company has a wide range of products at home, including bedding, bath towels, kitchen electrics, cookware, window treatments, storage items, and so on. They carry a lot of home decor, giftware, and housewares as well. The company operates both physical stores and e-commerce websites, giving the opportunity to shop on both platforms. One of the key strengths of BBBY is the strong brand recognition. The company has built a good reputation over time, offering great products and competitive prices, which has attracted a loyal customer base over time. So, another strength of the company is the diversified business model, in the sense that they sell a lot of different kinds of goods that are non-perishable to the customers. So, in some sense, I would say that this diversification helped the company to mitigate the risks and to generate stable revenue streams. BBBY is also successful in developing strong relationships with suppliers, which is very important for a retail business. So they have been able to secure those relationships with competitive prices, timely payments, and also being a reliable business partners to its suppliers. Now, with that being said, the company remains under significant sell-off pressure due to the company's specific and macroeconomic factors. The main reason people are interested in the stock might be because of the stock price itself or the volatilities from the stock market rather than on the fundamental side. Because fundamentally, BBBY is a retailer with a lot of brick and mortars. This is something that you don't necessarily want to see in today's economics, given people's shopping behaviors. Over the past 5 years, BBBY's revenue steadily decreased, with a decline of almost 20% between 2017 and 2020. This decline has been accompanied by a decline of earnings as well, as the company reported losses for several of its past 5 years. In terms of stock performance, BBBY's shares have been under pressure in recent years, having lost about 70% of their value since the peak of 2015, and since then underperformed compared to the overall market. It has also been facing increasing competition from e-commerce giants like Amazon, which has made it difficult for the company to maintain the market share and to drive additional sales growth. Also, the company has been struggling with declining sales in its physical stores and increased competition from the online retailers. To address this issue, the company has been focusing on store closures and cost cutting. They closed down many underperforming brick-and-mortar stores and are looking to reduce its workforce, closing distribution centers and consolidating the supply chain. So those measures are certainly good, but it's hard to say if they're enough. In fact, we're almost certain that they are not. Because despite those efforts, the company's financial performance has not really improved significantly over time, and in the most recent quarter, the company reported a decline in comparable sales, and the company's guidance for the next quarter can also be weak. So this is not the only issue facing the company. Those financial results are now affecting the company's assumption that it'll continue to exist. The current sharp decline in BBBY's price action is mainly caused by this concern, which also incidentally created a great amount of volatilities. More than 40% of BBBY's equity is owned by people that we can call institutional shareholders. In other words, they manage other people's money. The rest is owned by retail traders, people like you and I. This means that while the stock has a relatively high volatility, in theory, it's also a good stock to invest in for the long term, if there were no going concern issues. So, one key behavioral difference between institutional and retail shareholders is that institutionals can afford to wait and to play the long game, whereas the retail shareholders tend to trade in and out, believing that the more they trade, the more money they will make. This often results in a more volatile behavior as a shareholder. And another behavioral difference is that institutional shareholders are far more active in corporate governance, meaning when they have shares, they tend to vote on important decisions, whereas the retail shareholders very often don't bother doing so. In the current context, I would recommend not to invest in the stock certainly, but to mainly consider the stock for its trading opportunities. The reason I say this is because the fact that it has a large number of institutional investors could be misleading in our decision taking. One of the key catalysts that could explain retail interest in BBBY stock is also the short squeeze potential due to the significant short position against it. There are currently about 70 million shares being shorted off exchange, which is about 55% of the short volume. This can support the theory according to which there is a concerted shorting operation against BBBY, which, by the way, makes sense fundamentally. The stock isn't doing well, and the business model is relatively ill-adapted to the real economy as we speak. My recommendation, given my analysis, is that BBBY is a stock that we can trade the swings, and right now there seems to be a regrouping of the bulls, and they want to push the stock upward still because, well, it's a relatively small cap stock and it has a significant amount of short interest. So if there is any sort of takeoff, things might be very volatile in very short period of time. And the other thing is, this stock is also for people who want to stick in when like the times are the darkest. And what do I mean by that is, of course, it's possible that BBBY, after some significant reorganization, can regroup itself, can turn around the business and so on. But it doesn't necessarily mean that we're going to go back above the $10 level within a year. This is putting an unfair amount of pressure and expectation on your position. With that being said, I think that as long as this company doesn't go bankrupt, there's a lot of upward room possible. So this is why I would recommend to buy BBBY in the current stage and to slowly build up a position with an overall exposure that hopefully doesn't go above 1% of your portfolio.